MicroStrategy around 5 years ago transformed the company by using its balance sheet. They had a lot of cash on hand to buy Bitcoin. And so instead of the stock being valued on its actual software business, which had been languishing, it's valued as a holder of Bitcoin. But as Bitcoin has risen and MicroStrategy's stock has gone up, it's created an opportunity for them to issue convertible bonds and debt to acquire more Bitcoin. What's been novel is that they've issued these debt securities for almost no interest cost, essentially COCO, zero interest bonds. And so they're funding this without having to actually pay for the interest expense. Now, you might think that this is a little bit reckless, but it turns out it's a very novel strategy because they have created a lot of network value. They're one of the largest holders of Bitcoin now, and ultimately they may become the second largest holder of Bitcoin after the US government.
The trajectory of Bitcoin is attracting attention once more when Fundstrat co-founder Tom Lee released his most recent prediction, an astounding $250,000 in Bitcoin by 2025. The recent halving of Bitcoin has caused a supply squeeze, which Tom claims is fostering an ideal environment for exponential development. Government interest is growing, institutions are entering the market in droves, and retail investors are experiencing FOMO. According to Tom, Bitcoin will reach more than $100,000 in the upcoming months, paving the way for previously unheard-of heights, with $250,000 clearly within reach. Adding gasoline to the fire, rumors circulating from Washington indicate that Bitcoin may soon be positioned as a strategic reserve asset by the US government. The legitimacy and value of Bitcoin would soar if the United States amassed 1 million Bitcoin, making it the largest global holder. Watch till the end as we go deeper into Tom Lee's thoughts regarding the institutional acceptance of Bitcoin, its momentum, and the geopolitical ramifications of this digital gold rush. Thank you, and enjoy the video.
Part of the reason we have stayed constructive on Bitcoin is the price is following closely the prior halving cycles. The halving cycle, for your viewers, is when the block reward gets cut in half. That happened earlier this year. So there's a reduction in new supply. And the sweet spot of that price gain as supply is cut starts to happen towards the end of this year and then into next year. And I think that has supported why we expected Bitcoin to be 100,000. And over the next 12 months, I think something over 250,000 is possible, but maybe highly probable based on just following this price cycle. The second reason I think Bitcoin has maybe more upside than that is because the new administration has run on a pro-Bitcoin platform. And I think that the possibility of the U.S. not only legitimizing Bitcoin, but making it a strategic reserve asset, I think raises what would be the possible price scenarios for Bitcoin. Because if the U.S. government, as they intend, ultimately gets to 1 million Bitcoin, they'll be the largest holder of Bitcoin in the world. And they'd exert enormous positive influence on legitimizing Bitcoin. And maybe I would just add to that, it's almost like taking a playbook from MicroStrategy, because MicroStrategy has proven that using Bitcoin as a balance sheet asset has really created a lot of value for MicroStrategy shareholders. We've recommended to our clients that if they didn't want to be Bitcoin only, that they could look at Bitcoin, Ethereum, and Solana, because we put those largely in the same category as like sort of core cryptos.
Mm-hmm. Yeah.
We are also entering what I think is alt season. Next year is really when I think the crypto market could broaden. And this is where those who are really experts on crypto, and I know you run a crypto fund, actually are gonna have some alpha, because that is actually when many altcoins could do really well. I think that the stronger Bitcoin is, the stronger the ecosystem becomes. And so many of these utility tokens and things that are tokenizing really start to have a lot of expected value. I think that markets are at, like a friction point right now, because we've had 2 really good back-to-back year gains. I mean, anyone holding at the start of 2023 is up nearly 50% since then. So I think for anyone looking forward, the risk reward next year is quite different. So I can really sympathize with someone raising cash like Warren Buffett. Part of his selling, he had been doing it throughout the 2024, may have been in anticipation of changes, potential changes in tax policy, like paying a capital gains tax increase. But that being said, if we didn't look at the level of improvement of stocks for the last 2 years, but just over the next 12 months looked at what lays ahead, I think someone can be optimistic because we know the Fed is cutting interest rates, but at a time when the business cycle is still healthy. So in the 7 times the Fed did cut while we weren't in a recession, markets actually did really well over that period as cost of money falls. And the second is that I think some uncertainties have been cleared up. I think so much of the summer, our clients were sitting on cash and getting nervous, and you could see it in the VIX index because they didn't know who was going to be president. But now that election is behind us, and while I don't think anyone knows what policies are going to emerge, because there's a lot of radical policies being offered, including cutting government spending, et cetera, I think it's going to create opportunities for many companies. And I'd say that the way we would sort of look at that is we'd want to be looking at smaller cap stocks because they've really been held back the most. And the third thing I guess is constructive is as by the measures of like how people have deployed cash, it's still a pretty cautious market because margin debt hasn't risen for 5 months now. So that's not typically a sign of euphoria. It's usually a sign of exactly what you said, people getting cautious. And even like investor sentiment, like AAII actually has fallen away. So we're at not that level like where people are so bullish that you have to start to turn bearish.
For Bitcoin and cryptocurrency fans, Rule Pal's Banana Zone is creating waves once more and is becoming an exciting time. Pal clarified in a recent article on X that the Banana Zone is a crucial framework for forecasting the direction of the market, not merely a catchy name. We are about to enter a period of strong upward movements, the kind that everyone has been waiting for, as we leave the so-called boring zone, where prices hardly move. Pal advises investors to remain resilient and resist giving in to FUD, fear, uncertainty, and doubt, even if corrections are a normal part of the process. His counsel? Be patient and hold on to your Bitcoin because the benefits could be unlike anything we've ever seen. Tom Lee believes that Bitcoin is gaining enormous value because to the halving cycle, institutional acceptance, and creative tactics like MicroStrategy's Bitcoin-backed bonds. Tom claims that businesses like MicroStrategy are ushering in a new era of financial innovation by utilizing innovative financial engineering to increase their Bitcoin holdings. Now, let's dive back into Tom Lee's insights for more on Bitcoin's incredible journey ahead.
And let's say food, because you mentioned food. To me, the most important really is grain prices, because they've actually been softening. That would be really welcome if grain prices fell, because that would take the front end of food inflation out. Some of that could be because markets are trying to price in an ending of the conflict in the Ukraine, because that would help bring down grain prices because it would just take away friction from the market. With regard to tariffs, I think that there is a lot of saber rattling because, throwing 300% tariffs on products would be, of course, very economic. It would just create so much turmoil in the economy. But what I have heard from Chinese manufacturers, because I was on the West Coast this week meeting with a group of businesses, is that China has already reduced the tax refund for Chinese exporters, meaning like someone who makes an air fryer, if they were getting a tax refund from the government, that's how they're subsidized, that amount is reduced. So they're essentially rolling back the subsidy. And I think that will have the effect of negating the need for tariffs, especially because I think China's economy is a bit weaker. So if those tariffs were designed to get China to not try to engage in hostilities economically, I think it's actually probably working. I mean, that may be a surprise because I'm not sure it's widely known. I asked a lot of folks if they'd heard this, but that's what I've heard from a manufacturer. Historically, hedges for inflation have been land, like owning real estate, owning gold, which I think is still valid. But I think now there is hedges using crypto because crypto is also a hedge against dollar and currency debasement, which is on top of like inflation risk. So I think All of those are valid inflation hedges. Of course, if you are open to alternatives, even things like art and collectibles are pretty good inflation hedges as well. For most of this year, what we recommended to our clients are really 4 sets of trades. The first is AI-related trades. The second is small caps because the Fed is dovish and they're easing, and that's going to boost their small banks within small caps. The third is we've recommended financials and industrials because the Fed is easing. And the fourth is Bitcoin because a dovish Fed along with this halving cycle. So those are the 4 trades. MicroStrategy around 5 years ago transformed the company by using its balance sheet. They had a lot of cash on hand to buy Bitcoin. And so instead of the stock being valued on its actual software business, which had been languishing, it's valued as a holder of Bitcoin. But as Bitcoin has risen and MicroStrategy's stock has gone up, it's created an opportunity for them to issue convertible bonds and debt to acquire more Bitcoin. What's been novel is that they've issued these debt securities for almost no interest cost, essentially zero interest bonds. And so they're funding this without having to actually pay for the interest expense. Now, you might think that this is a little bit reckless, but it turns out it's a very novel strategy because they have created a lot of network value. They're one of the largest holders of Bitcoin now, and ultimately they may become the second largest holder of Bitcoin after the U.S. government.
In his discussion, Tom Lee emphasized a number of important economic concepts and investment tactics. Regarding food inflation, he underlined the significance of grain prices, which have been declining, possibly as a result of market anticipations of an end to the Ukrainian conflict. By reducing market friction, a drop in grain prices would lower food inflation. In reference to tariffs, Tom pointed out that China has taken a big step in lowering tax breaks for its exporters, including those who make air fryers and other products. This cut essentially amounts to a subsidy pullback, which may lessen the need for higher U.S. tariffs. Given China's current terrible economic situation, he proposed that this tactic might be a subtle but effective economic discouragement. Tom also talked about several inflation hedges, arguing that conventional assets like gold and real estate are still useful. He did, however, emphasize the growing significance of cryptocurrencies, such as Bitcoin, as a hedge against currency devaluation and inflation. He said art and collectibles as good choices for anyone looking for alternative investments. Regarding investment tactics, Tom suggested 4 important trades: AI-related investments because of their potential to revolutionize the market, small cap stocks because of a dovish Fed, financials and industrials because of the potential for gains from easing monetary policy, and Bitcoin because of the ongoing Bitcoin halving cycle and a dovish Fed. He praised MicroStrategy's creative use of low or zero interest bonds to amass Bitcoin in his review of the company's Bitcoin strategy. According to Lee, this strategy has increased MicroStrategy's shareholder value and established the company as a significant Bitcoin holder. Until next time, happy investing.